Hey, Justin, how are you?
I'm doing well, Ram. How are you?
Good. Week flew by. That was a fast one.
Yes, with 2 snow days for my kids and a Monday holiday. It was a very
Yeah,
quick week in some regards and slow in others.
that it was. That it was. So we had a fun chat earlier today with the authors of this book, The Great Demographic Reversal. So I would recommend folks check it out if you want to think about the long-term structural changes. And what stuck out for me was how demographics are driving not just inflation, but also interest rates,
Mhm.
earnings growth, and fiscal spending, namely entitlement programs and the worker to retiree ratio. I mean, it is
Yeah.
we always knew demographics were a big deal. We say demographics are destiny, but is driving four most foundational levers that drive investment performance. It's a big deal, demographics.
Yeah, it's really interesting to think about the labor pool and how that changing labor pool over time impacts these issues. And, that's really the heart of the demographics at one stage. And then at another, it's this entitlement question and the cost of supporting that segment of the population as they age.
Right. I thought another element that stuck out is when he said the fastest growing cohort within the population is the oldest of the oldest.
Yes, exactly. Oldest of the oldest. Now, that's where Healthspan comes in, right?
Right.
Because I've been talking with a lot of folks and they're all trying to say round off the curve. They want to live as long as possible, but then when they have no health span left, end it.
Right.
Uh, and that's the difference between somebody who has that capability and somebody who has longevity but a low health span is all where that long tail cost is.
Yeah.
I don't remember the statistic, but I know that it was a super majority of your lifetime spend on healthcare is likely in your last few years.
Yeah, I agree. There's a lot going on here. And the political tensions around demographics are only going to get worse because you have intergenerational issues, you have immigration policy questions and issues, you have pressures on wages, you have tensions between owners of capital and providers of labor, savers and retirees, I mean, it's a mess. It's a mess. And the other takeaway is policymakers have never lived through this. And politicians are kicking the can. They're not going to have the hard conversation, not going to address the issues. So there will be more volatility ahead. And how you position for that next 10 and really 20 and 30 and 40 years is one of the most critical questions that everyone should be asking, and no one really is. They have a coffee shop. They're not really saying, what does this mean for how do I invest
Yeah.
and implement it?
No, it's really interesting. But I think another factor, we're talking about birth rates, fertility, and kind of like the demographic trend, right? In our country and maybe in many others, there's a spike, the baby boomer generation, right?
Right.
And I think some view that there's been, oh, that was this one time and now birth rates are falling. But the data that I've seen shows that birth rates were falling well before the baby boomer generation. That was like an aberrant spike, and it's continuing down for the United States.
As
So,
fascinating, which makes sense as we move away from an agrarian economy, which started in the 1900 at 1 in 2 Americans was a farmer. You need hands to work the field, and it's modern
yeah,
technology and specialization. You just don't need that anymore.
that's exactly right. And so we're living through this moment where it hasn't reset, right? Like 100 years from now, this may not be an issue because you may not have like a ballooning generation of the oldest old. Um, you'll have you'll have different problems, of course, but
Yeah,
we're in this magic period where we had this rise in productivity. They talked about China and the growing demographics and the baby boomer generation working, consuming, consuming in a deflationary economy. And now it's all ending. The magic carpet
Yeah.
ride is ending.
And they also said that China's already shrinking. It's not a forecast. Year over year, China's shrinking now. It's happening. So it's we asked them about their views on interest rates. That's going to go up. Inflation, hard to keep low. Pressures there. And we asked them how they would consider positioning. Right now, these are macro people. It's very high level ideas, not very tactical, which is where we believe the value is. You got to really go deeper there. But they were talking about inflation-linked bonds. They expected the equity risk premium to go up. That's another way of saying that equity would be valued less. I mean, and bonds be valued less. Essentially, they're saying like there's a markdown on the valuation of assets overall. It was a very sobering kind of chat. Now, both these two worked at Morgan Stanley. We'll hold that against them. One is a retired emeritus professor at London School of Economics. The other one's a macro policy. They're credible people. Again, they've published before. It's a non-consensus view, but they did, I thought, identify the trade-off that policymakers have, and there are no good choices. There's no unless you get the AI productivity bailout, and the issue with the AI productivity bailout is it doesn't provide services for the elderly or the young, which is what you really need. Robots with empathy. We don't have that.
Yeah. So let's unpack a couple of those issues and talk about that. So let's talk about AI first. So the hope is not a plan, but they talked about politicians are just hopeful that there's this productivity boon. They've happened in the past. Maybe AI will be it. But your point is that the most in-demand jobs will not be beneficiaries of direct AI impact. It's not going to create more or better nurses necessarily, or home healthcare aides, or preschool teachers, or things like that.
Exactly. E-com fulfillment doesn't help us. Correct.
Right. Maybe it frees up labor to go to those jobs, right? Is that the way to think through the possible way AI?
So AI can impact white-collar jobs, not blue-collar jobs. You need more blue-collar jobs. You need more service jobs, service economy. It's not an easy transition. It's gonna be messy.
Yeah, it will be. Automated driving is one of those things where it's always been around the horizon, but if it does come, that really does displace a lot of jobs, which is really difficult in the short run.
You think the gig economy,
the labor pool in the long
term? The gig economy is not enough. The gig economy is not enough.
No, I'm thinking of look, commercial truck drivers.
Oh, I see.
UPS driver. I mean, that's a lot of people that.
Yeah. Yeah.
We'll see. Who knows? But then the other side to unpack is, what about politicians? What would be your policy solution if you could implement any policy solution for this?
Okay, it's hard questions, and I haven't thought hard about it. And I'm probably going to be wrong. Not probably, I will be wrong what I say. I'm probably going to change my mind in a few months. Here's what I would do. One, entitlement reform. How you do that? Means test. Have to means test. That means that if you generate income above a certain level, then you're not going to qualify for benefits. So I don't assume I get any Social Security benefits. I assume they're worth a zero. Okay, so just price that in, make that happen. We'll adjust, but that should be paired with something else. Like, for example, maybe I shouldn't have to pay into the Social Security trust fund. Maybe I can manage my own wealth because I'm an accredited investor or something. That there should be some kind of carrot there, I suppose, right? So that's one. Second, you got to cut spending. That's the easy statement to say. The question is where. We talked about entitlement. That's the big driver. I think the focus is on the big driver to entitlements. Then the third is, you need to improve your demographic story. The best performing stock markets in the world are the United States, India, and Mexico. And they have a better demographic profile than the worst stock markets in the world, which are China and Europe. I don't think that's a coincidence. That's structural in nature. And here's another fun fact. Countries that have higher demographic population growth rates also have higher performing stock markets. That's not, so China's interesting as like a tactical trade. It's not like if you can find an exporter there that's exporting to growing economy, that's a bit of a different situation. But it's like if you think about China as a business, it really is like in this decline. How are they going to grow? They talk about they can't arguably catch up with living standards now. Like that's out the door now. So yeah, the policy questions are not easy. They need to happen. And then the harder parts are around like, do you accept a higher inflation rate, which they're getting at? And their point is, well, look, if you try to win the battle on inflation, then you're going to have higher interest rates, which also mean higher deficits.
Right. Debt service costs.
Correct. So and that means you got to cut more expenses.
Yeah.
It's very, very difficult challenge. We really need a Manhattan Project for AI and robotics. That's kind of the only bailout it's the only solution that has no trade-off other than the investment itself.
Well, other than the one trade-off would be that AGI goes rogue.
Right.
But that solves our problems anyway, and then we don't have to worry about it. It's AI's problem to figure.
We got to pick our poison, So I thought how to position was interesting. They're long wheelchairs. I think this is where we can add a lot more value and perspective. It's kind of our job to do that. So how to maneuver. But one is like, I don't get why people own bonds. I don't get why people own treasuries. Don't get people who own TLT. Didn't make any sense then last year. Doesn't make sense now. That rings true doubly with all of this. If rates are going higher, inflation more persistent, what are you owning a bond for? The better opportunities and alternatives to bonds, for sure. And then the other is long semiconductors. Nvidia, again, leading today. It's a leader within semiconductors. It's been our thesis and theme that's the way to bet on AI, the CapEx receiver layer. The market is assigning leadership to semiconductors. We've been all over that. So I think more of that, because that's the driver of the productivity boom, the bailout, and you got government spend there. So that's one. The other is nursing homes, long nursing homes, small cap. There are small cap nursing homes, good businesses with good prices. That trend's going to keep growing. That's an annuity business. Biotech and pharma and new modalities and new treatments. We talked about treatments for Alzheimer's, and I thought they made a great point that a lot of the biotech and pharma focus has been on the primary drivers of mortality, like cardiovascular disease and cancer, which makes sense. We want to focus on the primary drivers of death. But if we can enhance lifespan, or health span, to your earlier point, through improving mental function and addressing cognitive decline, like Alzheimer treatment, like that matters because of these issues. Because if you can live longer and be more productive in the last 10 to 15 years, then the elderly population doesn't go from being a tax on the system, but being a driver of productivity. I thought that was an excellent point. And there are some technologies in biotech that are getting past phase 2 trials. There's some promise. Like a lot of false starts around Alzheimer's and Parkinson's, but there are, and that's why we like we're overweight biotech. So I think our themes are actually well aligned with the demographics. I also think the hard question is growth stocks versus value stocks and how to position within both of those. That's a really interesting question.
It's true. It gets very complicated, and the political solutions are difficult.
Do you have a view? I know we got to wrap up in a moment. Do you have any highlight answers? Yeah.
Well, geez, I'd work backwards. So I think long term, if it's a demographic question, what can you do to incentivize better demographics, which is getting above or at replacement rate, which is about 2.1 children per family, right? And so that requires some incentive, which I don't think is really just in the form of tax credits. That's kind of like indirect. I would be more direct in incentivizing. Yeah, cash bonuses. I would also incentivize like an early savings program that's like government backed, maybe like the government incentive is actually into like a cash bond that is
Baby
given
bonds.
to,
That was the Bill
yeah,
Ackman.
baby bonds.
Right.
Yeah. Yeah. That I think that's a really interesting idea. I also think that you've got to invest in early childcare and um, kind of like getting the leave correct for the labor pool, which
Mm.
is tough, and that's an entitlement. But if you want people to have more children, you got to be as supportive about what the role of parenting
Right.
requires.
Yeah. Yeah.
I'd raise the retirement age. I think that it's too low for where we are headed as a society. Um, and I agree that a means test is important. I disagree on the giving somebody the ability to not contribute, because maybe you don't contribute earlier because your income tells you you're going to not have to draw, but then someday something goes wrong and you need to draw and you never paid in. Do you get cut out, or
Yeah,
does the system?
the hard questions around all of that, the
Yeah,
transition funding, I mean, these are really difficult issues. They
right.
were explored in the late 90s, but they didn't really go anywhere.
Yeah. I think one of the big challenges we have societally is this tension between capitalism and socialism, right? Like we have a lot of socialist programs, whether we want to call them that or
Oh,
not.
yeah. For sure. Yeah.
Safety nets are socialist programs.
Right.
That's okay. But we have this drag yourself from the bootstraps capitalist bend in our society, which is also great, but it ignores the kind of infrastructure that exists to make that possible for some folks. And I
Well,
think that decoupling those flashpoint terms is important, because we need to have a sense of shared responsibility for certain things in our society. And we shouldn't stigmatize them, but we should recognize that that's part of being an advanced society, is that we don't let people fall through the cracks to a certain extent. And we shouldn't put it on companies. Last point is, we
good.
put
Yeah.
too much on companies to provide healthcare or provide 401ks and things like this. And that's hard in a gig economy. That's hard in a creator economy. It's hard in an economy where people are moving jobs frequently. We're not in the era of, I'm going to retire with a gold watch from a company I spent 45 years at and get my pension, right? So, like, the system has been set up for a way of working that doesn't exist anymore. And
Yeah.
we're ignoring that, and we need to like have real conversations. And I think the last point I would make is, I think this is where having a potential election between two octogenarians just doesn't make me feel really good about the
Right.
future.
Yeah.
They're just disconnected from what needs to happen. That doesn't mean that somebody who's our age necessarily has the right experience or set of capabilities and network to succeed. But I wouldn't mind seeing somebody who was just maybe even in their 60s,
Yeah.
like
No.
2 decades younger, looking at
Yeah.
these
No, I agree.
questions.
Well said. Wow. You really thought deeply about it. A few things. One is the burden shouldn't be on company. But look, these programs were created in the New Deal and the Great Society when the average age uh, was below 65. Most people didn't even qualify for Social Security. It was a political program. You get elected. Okay, great. Now we're paying
Yeah,
the consequences of that. And
exactly.
what's happened is we moved the responsibility from civil society and the private sector, namely families, to the public sector. And
Yeah,
that's not sustainable. Like, I like ancient wisdom. Ancient wisdom, you had multi-generational families. You had the concept of it takes a village to raise. It's so true. I have my in-laws stay with us a couple months of the year. They help out with the kids. Better care than you can get from a nanny or daycare. And they have a different relationship with my kids than I do. And that imparts some kind of value and education that they can provide in a way that I might not be able to. And you need to increase the scope of family and community and civil society. Community means a lot. It means your CrossFit, could mean a church, can mean a lot of things, can mean volunteer organizations, but the scope of civil society. And when you create these government programs, it extinguishes those. It crowds
I
it
think
out.
unfortunately our society right now is uncivil. I think that's part of the
Yeah,
problem.
and part of because it's like, okay, it's like who controls what spending based on who's in DC, and that creates a zero sum game. Anyway, so good chat. I don't think we'll solve all the problems here, but it was quite an interesting conversation. I recommend folks check out that we have a non-consensus investing interview with the authors of The Great Demographic Reversal. Definitely will make you think about, are you well positioned for the changes over the next 20 to 30 years? Really hard social policy changes. This is really hard. Really hard.
Yeah.
Honestly, these are hard questions, but someone's got to start having a conversation.
Yeah, we got to start having the conversation. I wore this hat to that end. This is my Onitsuka tiger hat. And I wore that because Japan is one of the interesting stories that we only touched on briefly during the demographics, but like they're a harbinger of things because their demographics are a couple decades ahead of ours. And when they have more adult diapers being sold than child diapers, you have this demographic issue. So it's going to be interesting to study the US, China, Mexico, and Japan and understand and India, of course, how these different economies are moving.
Right on. Until next time. Have a good one.
Take care. Weekend, Rom.
You too, bud.